With the economy doing so well and the stock market setting new records, what should you do with your investments? And if you don't have any yet, where should you put your money? Well, President and founder of Premier Retirement and Wealth Management, Jeff Vogan, is here with some advice. Jeff, thanks for joining us again.
Thanks for having me again. Love being here.
Pleasure to see you. I love seeing you, especially when the market, like I was saying, is doing so well. So what should we really do about this market? What should we start thinking about?
Well, first of all, we're in good times. The economy seems to be doing well. They love the new, tax program that just passed. Corporations are able to spend more money, and there's a lot of liquidity that are going into the market to continue to prop it up. We are in the longest bull market we've had, except one other time back in the 50s. I think we're even probably eclipsing that time frame now. We're at unprecedented highs from the standpoint of not just length of the bull market, but valuations, price earnings ratios, and things like that. Now that may be concerning to some, and it is a little concerning to me as well, because usually what goes up must come down. We know that there's market corrections, and we don't know what's going to cause it or when it's going to happen. It's kind of like a storm brewing, maybe a hurricane offshore. We know it's there. We don't know when it's going to come. We don't know what devastation it's going to cause. But I think it's worth preparing for. I think the market still has some upside based on the economy, but it also has a lot of downside. There's a lot of room to give back if people start taking profits. And speaking of taking profits, it's never too late to take some off the table, to put some aside in a safe place if you can't afford to lose it. And I do believe in the theory, if you can't afford to lose it, don't be in the market. But there is definitely some good upside, a lot of momentum, and kind of a euphoric feeling about the market right now, which typically precedes those dangerous times. So
right, like you're saying, the market can be volatile and people's investments can change at any minute. So what strategies do you employ to really weather any type of storm, so to speak, in the market? Well,
first of all, I think the old adage, asset allocation, diversification, still applies. However, people, I think, misinterpret what diversification is. Diversification doesn't mean have 8 different growth funds with different names, but all owning the same stock, because if the market gets bad, you're still going to lose. We tend to have this recency bias, meaning we only see what's happening now or the last year, and last year was great in the market, and so we want to think, well, it has no end in sight. So I think just having a smart outlook, realizing that it doesn't always go up, it may not always go up, and we might need to take some precautions. I think it's good to take profits. You can put some money in cash, you can pay off some debt, maybe pay down a mortgage. There's a lot of different things you can do. I think diversification into assets that don't have risk is another option, and we can talk about those if that's what you're asking.
Yeah, don't put all your eggs in one basket, right? Like you're saying, diversify. There's different types of things you can invest in. One of those, for example, principal protected accounts. What does that mean?
I mentioned that before, and I like principal protected accounts, and it doesn't necessarily mean cash, which pays like 0 interest, or CDs, which are certificates of deposit. I think they should change the name to certificates of disappointment, because the interest rates have been so low for so long. But there are some fixed indexed annuities. There are insured products that have some upside, that don't have any downside. Principal protection, one of our favorite products is a fixed indexed annuity. It goes up based on the index. It doesn't go down. Principal is protected. Now that might sound like cake and eat it too, and it is. Now the downside is you don't get the whole upside of the stock market. The upside is you don't get any of the downside, and I believe you can win by not losing. So there are these indexed products. There are indexed insured products, even in the insurance side, that do similar things, where you can make over 10% in a good year, but not lose any money in down years. And you can actually average a pretty good return.
Well, and I think the point you try to make, too, is that the market is for everybody to get involved in. Really, as little or as much money as you have, as long as you can afford to invest in the market, then you really should. And you offer your perspectives in a newsletter that people can get, actually. Tell us what goes into that newsletter.
Well, there's a little bit of background about the market. Mostly we do a weekly newsletter online that keeps them more up to date, but our Perspectives newsletter, like I brought today, gives kind of an overview of what's happening. We have everything from golf tips to recipes to Sudoku games in there. It's a pretty fun little newsletter, but our perspectives are that there's a lot of ways to skin the cat. You don't have to just do it the Wall Street way, and you don't have to just do it the insured way. Being an independent advisor like we are, we're able to kind of wear both hats and see what makes most sense for most people, and kind of devise a plan that makes sense for them based on their values, their goals, the timing between if they're working and have a lot of years to make a lot of money and not worry about market corrections, they can be all in the market. If they're ready to retire and can't afford to lose money, maybe they should scale out.
Right. Well, anybody can learn it, and having somebody like yourself who is really knowledgeable about all of this and can give that good advice is extremely important. And also you offer classes for people too where they can continue to learn a little more. Hit on a little bit what these classes offer.
Well, it's called Passport to Retirement. You know, the rules have changed. A lot of the things that used to just be assumed are no longer assumed. After we've seen, you know, the lost decade of 2000 to 2010, the market crashed twice of 50%. And so when you're in retirement and you need that money to live on, you need to protect it different ways. You need to take advantage of tax programs, tax planning, estate planning. We cover all those aspects in a class. It's pretty condensed. And it helps people ask the right questions. We can't give all the answers in a class, even if it was, you know, a whole year long. But in a one-night, pretty long 3-hour course, you'll get to know enough about different aspects of the market to ask the right questions so that you can get the right answers and make better decisions.
Ask the right questions, get educated, and secure a good future for yourself. That's the idea you're trying to tell people. So Jeff Vogan, as always, thanks for joining us.
Thank you.
Absolutely. Now attend one of the next Passport to Retirement courses hosted by Jeff at Pima Community College's Northwest campus. Dates are listed there on your screen, and for more information, to schedule a consultation or to sign up for the Perspectives newsletter and weekly market update, just visit premret.com or call 520-780-9059.